All right. We are live. Finally live. Turn myself down over here. All right, I'll give you guys a couple minutes to pop on. I'm going to, let's see here. Get my camera or my chart shared real quick. So yeah, just let me know as you guys pop on, please. Yeah, I'll give it just a minute, couple minutes. Turn that volume down over here. All right. Just giving it a few minutes. Get a couple of you pop on. Just let me know if you will. Let me know that you're in. Counts down the seconds and everything. Hello, hello. If you guys can, just give me a thumbs up or a hello or something as you come in. Just so I can get at least a couple of you in here. We'll grow this thing along the way as always. I tried yet again to I spent another couple hours on OBS yesterday, and it just everything I try is just not working. So it's YouTube Studio for now, guys. I'm gonna try to get one of my guys on this thing. I thought I could figure it out again yesterday, but apparently it's just not working. YouTube Studio is just not syncing to OBS software. That's the one that I have been using for quite a while. I use OBS for my videos that I create, my Sunday long form videos. It works great. Works awesome. But the minute I try to sync it up to YouTube Studio, it's just not working. So I'm over it. Absolutely over it. Yeah, just can't do it. I can't figure it out. So I ain't going to stress over it. I'm going to trade some charts today. Guys, if you will, just let me know that you're in. Just drop a chat saying hello, a thumbs up, whatever you'd like. A frowny face because I can't OBS it. Okay, whatever you want to drop in. I just need to see at least one or two of you just pop in. Just drop a chat. That way I know you're there and I'm not talking to myself, okay? I am in a couple trades right now. And I'm already hot. I'm going to pull my jacket off already. Just give it a minute over here. Refresh my top setups. Anyone in here? So yeah, just give me a thumbs up or something. I'll start talking once somebody chats with me, just so I know I ain't speaking with myself. Okay. It's showing a couple people in there, but I'm not seeing any chats. So just give me a hello while I get my charts prepped over here. Oh, it did update. Perfect. Refresh. flip this over here real quick. What was that? Control R, was it? I try to refresh my screen. Hopefully I don't lose you guys. Actually, let's not do that. Anybody? Anybody say something in the chat, please? Just let me know. Let me know who's here. Check my chart over here real quick. Anybody in here? What the hell is this? Refresh. Ooh. My trade's looking good, ladies and gents. All right, I got everything set up. So as you guys pop in, please let me know you're here. Okay. I'll start chatting once I get one person in at least. I know I picked a horrible holiday week to start a stream, but got to start somewhere. So this is more or less trial and error. This last week plus this week. Working out the bugs, guys, in order to figure out all this software. Again, I'm a trader. I am not a tech wizard by any stretch. I use Grok to kind of learn some of these things, some of these programs, and sometimes it works great, and sometimes it just spins you around in circles. So, yeah, again, just somebody give me a smiley face in the chat or something, okay? Just so I know you're here, because I don't know otherwise. I don't know if anybody's in the chat or watching. So, smiley face, a frowny face, thumbs up, a thumbs down, okay? Anything of that nature. Just drop something in there. Let me know who is in, where you're from, where you're at. Okay. I will say I am in a couple trades at the moment. Flipping on over here to my chart. So I'm in a silver trade, and I'm also in a NASDAQ trade. Now, and they're going really nicely, actually. The NASDAQ trade, so by the way, I've got 3 accounts, just so you guys know. Got a couple challenge accounts, and then I've got this account that I use to show you guys examples, trading examples and such. So I got into, let's see, I think I got into the NASDAQ trade first yesterday. Now, on this challenge account, I actually had it, I had it too close. The stop loss was too close. Okay. Let's just go click on that. On the other accounts, I gave it a little bit more breathing room. It's actually, and they're still in, but it's not in anymore on this challenge account. So really simply, guys, I had a 30-minute demand zone on NASDAQ, and look, it's the U.S. indices, the metals. Okay, a couple currency pairs, they're giving me bullish signals. So when I saw it hit this demand zone yesterday, I popped in. You guys can see. I mean, this was at the start of the New York intraday session. Good morning, Conor McGregor. Hey, got the UFC present. I like it. Good morning, Conor. Tell me where you're from, man. But yeah, so I got into this trade yesterday morning. I think I got into it on air with you guys, like right at the end of the stream. That's right. So I got into it on here, and I was in such a hurry to get to my other charts. or my other accounts that I didn't I didn't verify where I put my take profit. So guys, you can see I put it at a 1-to-1 right here. Okay, I got in down here, the Caribbean, having a senior moment. Hey, look, I'm 43, almost 43, and I'm starting to get some of those senior moments too. So I feel you, brother. The Caribbean, where at in the Caribbean? I went to the Dominican Republic about 12 years ago. No, I guess it would have been about 10 years ago, 10 or 11 years ago, to Punta Cana, and I loved it there. The one thing that was not so great was how all the moss kept floating in from the ocean. St. Kitts, okay. Oh, the one-on-one, yeah. Oh, yeah. Oh, yeah. That's right. Yeah, I thought the name looked different, so that's why I was a little confused on that. But hello, welcome. Yeah, so that's well, just to finish my thought though, the Punta Cana, the moss comes in, and they actually pay like several guys all day, I guess, to just rake in the moss. I think it's moss as it just comes in, floats in. So it was crazy. But yeah, it's but then you go around the bottom side of the country to I forgot the name of the place, but it's another beach off. I think we had to take a sailboat to get out there. There's no motorized vehicles allowed, and it's where they filmed the movie, the 80s movie, Return to the Blue Lagoon with Brooke Shields. So we went to that exact same beach, and you're standing in knee-deep water on the beach, and it's just like crystal clear blue. It's the prettiest beach I've ever seen. The moss is normal, yeah. So yeah, it was just quite the contrast on that island compared to the east side of Punta Cana. Quite the difference, but nevertheless, it was beautiful, and definitely got to get back there at some point. So, well, cool. But yeah, just to kind of finish my thoughts, guys, on these trades over here. So NASDAQ, this was the 30-minute demand zone I bought in. Now, why didn't I go to a higher time frame? Well, because the reward to risk didn't make any sense. You know, I mean, if I go up to well, first of all, I didn't really have a pretty picture of a demand zone. I mean, you could squint your eye and say that this would have been the demand zone, okay? Because technically we have a gap. If this is our let's do this. So if this would have been the one we used, then this is our leg out, and then this is the second candle. So by definition, we have a gap, right? Okay. By definition, that right there is a gap. Why didn't I use that? Well, because the reward to risk didn't make sense. I have to incorporate the range of the zone itself. So if I just calculate that, okay. Now this again is NASI. So 142, okay, you guys see right here, 142.25 points, right? Well, if I measure that unit times 3, does this peak hit it? Absolutely not. So let's do this. Let's measure that. Okay, if I already know that this is 142 and I go over here to this little swing high, that's only 195. That's not even a 1.5 to 1. It's not paying me enough to get into that trade. Okay, because when you get into a trade, whether it's a supply or demand zone, you tend to want to take it to the opposite higher time frame swing, high or low, which is typically where a supply or demand zone is hiding. So because that was only giving me basically a 1-to-1 reward risk, I did not want to use the 4-hour candle. I wanted to step down until I find a prettier picture. You just keep stepping down, guys. Okay, I don't have a pretty picture there on the 2-hour. I don't have a pretty picture on the 1-hour. All this is efficient market structure when you're looking at wicks and bodies for the second candle to the right, second candle to the left, right? They're overlapping. There's no gaps. So I don't see the first gap till I get all the way down here to the 30-minute time frame. And that's why we look at this red candle here with the gap right there. Okay. So that would be our first gap right there. So that's why I draw it up there. And let's just delete that. Okay, that's why I draw up the demand zone to the 30-minute candle itself, like that. And as you can see, it bounced in and just got wiki like crazy yesterday. Wiki, super wiki, WikiLeaks. Why don't let's see here. Why don't you think it could go through the high? Well, I mean, I don't know if it will or would or not. It's just because zones and swing highs and lows, okay, they tend to act as magnets. They like to draw price to them, but oftentimes price bounces and goes the opposite way. Well, since I know that, I need to calculate. Okay, if this trade's worth getting into, the supplier demand zone, or the support and resistance. Okay, if somebody's a support and resistance trader, is it going to pay me? Is it worth putting a little bit of money on it? And for me, a 1-to-1 reward risk is just not worth it. Now, yeah, I mean, I would expect that it would go above and beyond it, but the point is, I want to maximize the reward first. So for me personally, so a lot of people are 1-to-1 traders, and that's totally fine, but I'm not. If I'm going to get into a trade, I want to see at least 3 units of reward. That's just the way I was taught, and I've kind of played around with that quite a bit. I've tried 2-to-1s. I've tried 1-to-1s. 1-to-1. Well, people that trade 1-to-1, well, they tend to have a higher success rate because you're only going for 1 unit of reward. I'm going for 3, so I'm asking a lot of it. But it's easy to do when you see that range, right? The range makes sense on a 30-minute. So in other words, why would I want to get in early when I can just wait and get a little bit cheaper of a price? And this ain't for everybody, but I've just found that these trades work a lot better. I will have another loss or two here and there, more so than a 1-to-1 trader. Okay, I won't have some crazy 70-80% success rate. Mine is about 40%. Okay, so for every 10 trades I get in, I lose 6 of them. Okay, but I win 4, and when I win 4, what's going on, Algo Prime? But yeah, when I win those 4, it's going to obviously make up for the 6 losses and then grow the account. So that's just the math that I like to use. Some people don't even get into trades like this unless it's showing them a 5-to-1 or a 7-to-1 or a 10-to-1, right? Now they lose a lot. They probably lose 70-80% of the time, but whenever they catch one of those big 10-to-1 runners, it makes up for all those small losses and then some, right? So 3 is my favorite number. It's always been my favorite number growing up. I don't even know why, but it's just always been 3. So yeah, whenever I was taught 3-to-1 is a good reward to risk ratio, I just kind of latched onto it. And it's been doing me wonders. It's been doing me great. So yeah, that's why I don't want to look at it from the 4-hour perspective. I want to look for the deeper price, for it to come down here now. And then, yeah, like I said, on my other account over here, I guess it's kind of pulling back a little bit. 116 on one account, 50 on another. Yeah, my good trade right now is silver, to be honest. This NASDAQ trade just got in and kind of went boring. It's just went sideways, right? But you can at least see clear as day that it made a clear bounce off that 30-minute zone. So I'm waiting for it. I'm not going to get out of this trade. I'm going to place my bets that the fundamentals and the sentiment are going to start making this thing turn to the north. Because if I look over here on my top steps, guys, NASDAQ is giving me a very bullish score of a +10. So the technicals and the seasonality, okay, the month of December. Now we only have 2 days left, and this will reset because obviously next month will be January. So the seasonality score may change on some of these things. But for now, okay, for today and tomorrow, it's still a good seasonality score. Now, January is a good seasonality score as well. So that's not really going to change anything on the indices. And then, yeah, the crowd sentiment. So think about this. The crowd sentiment, the crowd is placing bearish bets on this. How do I know that? Oh, this is the put ratio. Okay. Take a look at this. So let's see here. Put to call ratio. And I'm going to select the NASI over here once it finally pops up. So look at this. So this is the options market. Okay. And this is the NASDAQ. So there, you see this white line, how high it is above the high put volume. So this is the real live options market saying we are net short because they have placed a lot of bearish bets, which are puts, right? Anywhere in this middle is kind of neutral. I'm not really getting a good signal either way, whether it's the put volume or the call volume. But in this case, this thing is extremely stretched above the high put volume line. So if I know that everybody is live in the market net short, I know that their stop losses are above price. Okay, they're buy orders. So what do banks do? They like to look for that liquidity to fuel their orders, right? So yeah, observe the masses and do the opposite. Okay. And then the same thing with silver, because I'm in a silver trade right now. Just taking a look at it's got a high put volume as well. It's not near as high as the NASDAQ, but it's still heavily net short because of the high put volume, the bearish bets. Liquidity's got to go somewhere. Stop losses have to go somewhere. They're up top. Okay. So that's the primary reason I'm staying with these trades. I mean, above and beyond the fact that I'm obviously a bullish signal. So there's silver at a +8 right here, and then NASDAQ at a very bullish +10. So, and along with the other indexes there, Dow, the S&P, okay, and then your silver, your gold, your metals, okay, silver, and there's gold at a +7, platinum. I think they had a limit down or something. I was just reading an article earlier, a limit down. Where did I see that? Oh no, I think I saw it over here on my financials. A limit down on, was it platinum and palladium maybe? Where did I see that? I know I saw that right here somewhere. I don't know. It's somewhere on here. Limit down though. Okay, that's crazy. That just basically means it dropped like 10% and they had to stop trading or halt trading. So crazy stuff. But I digress from that. Guys, today the only red ticket item we have is the FOMC meeting minutes. So that'll be released at 1 o'clock for the US dollar. And then I'll take that report and thin it out for you. And then tomorrow, if I get a handful of you on, okay, it's obviously the day before the new year. So it may just be myself. I don't know. Maybe one of you might pop on with me tomorrow. Again, this week is all about more so trying to iron all these bugs out with the system, the OBS, which I'm still going to have to get fixed. But yeah, I'll kind of go through that. And I'll even go through it on Monday as well. Okay. Monday obviously will be a much busier day for us. So yeah, we'll take a quick peek at that. But guys, remember when we did get a cut on the interest rates, recently, but it was more of a hawkish cut. So that's, even though the action itself was bearish for the US dollar, once you look above and beyond that, they were talking all kinds of hawkish. So that's actually a bullish. Okay, that's a bullish sentiment for the dollar, the US dollar. So interesting stuff, but we'll worry about that tomorrow / Monday. And that's it. That's the only red folder event that we have, I think. Oh, I'm sorry. Well, other than tomorrow's unemployment claims, our normal weekly unemployment claims, 7:30 a.m. Central Time. Guys, keep in mind, I'm in Kansas City. So anytime you see a time on my computer anywhere, that's Central Standard Time, Kansas City time. So, but yeah, as far as the unemployment claims, plus 3,000 more, okay, is the forecast. We'll see how that affects. We'll see if that comes out on target. If it comes out just like that, I would say that's very, very slightly bearish, okay? Think about it. That's 3,000 more people out of work than the previous week, right? So that's less money going into the economy, and it just kind of spider webs. I would say that's a fairly small number. If this thing was telling me plus 240,000, 250,000, that'd be something to worry about. But just, that unfortunately, that's still 3,000 people that are out of work compared to the previous week. So it's not good. But when you're looking at the economy as a whole, really not that big a deal, right? So, and I was there. Look, I was one of these unemployment claims a while back. Okay, a year and a half ago. So I was one of these stats. I know what it's like. It's just a matter of fighting hard and get back on top of your game. So, yeah, let's go back one more time to the top setups. So yeah, I've already went over. So we got the indices, we got the metals, As far as currencies go, the only thing we have, and this is a very dynamic list, guys. This thing might change a couple, 3, 4 times a day. Just depends on what reports are coming out, which we just looked and saw that we've only got the one. Okay, the one report coming out at 1 o'clock for the FOMC minutes. So it's not really, I don't see this list really changing a whole lot at all this week. Again, it's a holiday week. Okay, most people are checked out. They're ready for the New Year's parties and the champagne and the crazy looking goggles and finding their midnight kisses, right? So, but yeah, as we stand, we just got the pound dollar for the bullish. So we'll take a look at that on a chart here in just a moment. The Nikkei in Japan is still on the list. Okay, so the Japanese index has not been on. It's not come out of hibernation. When I say hibernation, I mean neutral. Okay, it hasn't come out of there for quite a while, but this week, all of a sudden, it's back to a positive, +5 or higher. It's a +6 right now. So we'll take a look at that here in a moment as well. And then the only bearish assets I have are 3 currency pairs. Okay, we got the Euro Aussie, which is the strongest bearish, -7. Then we got the pound Aussie and the Euro Swiss. So we might as well just take a look at all these. This is not a very big list for me. Keep in mind, I personally don't trade platinum. I don't trade copper. Yeah, I think that's the only thing on the list. I used to have a way to sift and sort and exclude items that I don't trade, but they did a little bit of a change up on this recently, and they took that away. So hopefully that's just a temporary thing. But yeah, I like to keep my list nice and tight. But yeah, this is it. So let's go take a look at some charts. Oh, let me see what your question is here. I'm sorry. I'm just going to ask all the questions I normally would. Yeah, ask everything. Ask anything. Can you take a look at New Zealand dollar? Yeah. 4-hour demand. Yeah. Yeah. I've been watching New Zealand dollar since, well, all week basically. How do you look at that? Yeah. Yeah. Ask all the questions you want. Hey, this show's for you. I know it's just 1 or 2 of you in here now, but again, we'll build this thing up. Again, I picked a very bad week to start this stream. We were doing streams for through All Prime since the summer, and so they just got to a point they just wanted to try some things, okay, to basically increase viewership, right? To be quite candid with you, wasn't looking the greatest, so they wanted us to go out as individuals and try it this way. So off to a rocky start, obviously, with all this OBS software issues and obviously a holiday couple weeks. Okay, but we'll get this thing going. But yeah, no, ask all the questions you want. So yeah, let's go look at that for you. Not New Zealand dollar. Let's go flip on over to my chart. I was watching this. Now keep in mind, okay, just to step back over here for a second. So New Zealand dollar was giving me a bullish signal until today. So it's not on my list now. Oh, well, oh no, I'm sorry. It is up there. I'm a dummy. It is there, guys. New Zealand dollar. So yeah, it is still in play. Get it. All right, 4-hour time frame. And it really depends on the software you're looking at. So like for me, I look at this and I don't see that it's in a 4-hour demand zone. Now, if you're talking about this red candle here and then the big candle out, I see what you're saying. Here, let me delete this. Like if what the hell is going on? So come on, click on the box. There you go. So if that's what you're talking about, I see what you're saying. The only reason I personally don't like this as a 4-hour demand zone is this red candle did not come down even with this candle that left the zone, right? Basically, it's saying that all the trading activity for that demand zone candle was in the top half, right? If this is our zone, meaning we have to go to the bottom of this wick, right? Then there was no trading activity in the bottom half over here to the left. So in other words, the zone would have to be placed technically like this if we're looking at the candle itself, the demand zone candle. But you cannot do that because you have to include the wick. Well, the wick basically doubles, takes half of your reward away. So yes, you could still do it like that. Okay. I just personally don't like to do it because I've seen thousands and thousands of zones to know that if this wick is coming down like this, even deeper than that candle, it's probably taking all the orders away. That's kind of the way, because we know clearly there's no trading activity in the bottom half of this candle. Okay, we're looking at this red candle. There's no trading activity below it for that 4-hour period. It's all concentrated up here. So rather than looking at this as a whole entire zone, I would want to go to a smaller time frame. So by doing that, okay, let's go down, divide by 4, go down to a 4-hour, or to a 1-hour, sorry. Okay, would that be a demand zone? Okay, this is that same area. Okay, there's a red candle. Let's think about this for a second. So that's a nice, beautiful, what do you call it? A tombstone candle. I don't get too deep into the candle names and patterns and all that, unless I'm looking at engulfing candles for my reversal patterns. But yeah, this is by definition a demand zone. Well, why do I not like this demand zone? Zoom into it. Okay. Why do I not like that demand zone? Well, 2 reasons. Number one, this would technically have to be the leg out candle, but it didn't go very far. Okay. And half of it got wicked back down. So basically closed at 50%. Well, the second reason is the wick on this second candle is touching the wick on the demand zone candle. So that's a closed gap. That's an efficient price structure. Banks don't like efficiencies. They like inefficiencies, right? So rather than use this as my demand zone, if I was to look at this on a 1-hour, I would actually do it like this. Okay. I would actually be looking at this as the demand zone. Now, it obviously takes away, all of this free play down here as far as, adding that into your risk. But well, number one, it gives you a better reward to risk. But number two, you could still turn around if you wanted to be extra conservative and put your stop loss, down here at the bottom. It's really however you want to do it. But it gives you the option to look at this as a little bit more exact of a trade, a little tighter stop if you were to put the stop loss below the candle itself. But yeah, clearly from here you can see had the first gap. So if this candle looks the strongest, that's where I would say the unfilled orders are chilling and hiding. Now, having this big wick over here to the left, because I have to keep it in mind, right? If that wick were not there, yeah, this is an easy call. Stop loss right here. But because that wick exists, okay, I have to keep it in mind if I'm going to incorporate it for a stop loss. But the other reason that I don't like that candle is because if you look underneath that candle, what is our volume spread analysis candles looking like? Blue. It's tiny. There was almost no activity right here. And that's understandable. Why? Well, because this was last Monday's end of day candle. This was the intraday session changeover candle. There's no volume. Okay. The markets typically close for about a half an hour or so, right? To switch over from the current intraday session to the next day's intraday session. So there was no trading volume here. So if I know there's no trading volume here, do I really want to take a stab at this zone, saying that there's enough trading activity, enough interest to push price up? I mean, price did end up going up, but that's because that's where the Asian session traders stepped in and said, hey, we want to take this market higher. It wasn't from this candle. Okay. There's no volume. So I don't care about this candle. That's why personally, if I were to get into this trade, I'd be looking at that 1-hour demand zone like that, not the whole 4-hour candle, right? So hopefully that makes somewhat sense. Hopefully I explained that okay. But yeah, I mean, even so, look, here's the thing. I would even despite all those reasons, I just basically shit on that zone. Okay. I still was watching because of some smaller time frames. So let's go down here. I was looking at, I guess it was that candle. Is that right? Pretty sure that was the exact zone. Let me look here. 4-hour, 2-hour. Oh, it was the 2-hour. I'm sorry. It was the 2-hour. I was looking at it from a 2-hour perspective. That's why that was not looking right. So if I click on that, guys, I was looking at it like this. Let's delete that. Let's get that out of the way. See this candle? This was the candle I was more interested in, a 2-hour. Yes, it still incorporates that wick, but the candle after the leg out candle is where the volume started stepping in. So I personally was actually looking at that, but why did I not get in? Well, a couple things. Number one, it's in the middle of the curve analysis. So we got our swing low. We got our swing low down here and then our swing high over here, right? So this is the middle. This is the diddle in the middle. This is typically where retail traders get chopped to pieces. So yeah, 2-hour time frame, it actually looks pretty good. Okay, let's divide 2 by 4 and what we get 30 minutes. What does our 30-minute time frame look like on that same zone? Okay, now we start getting back into that situation I was calling out a little bit ago. There's no volume. So this is why I stayed out of the trade, because of the volume, right? Now, the volume really doesn't kick in until the exit candle on a 30-minute time frame. So, by definition, I would want to be looking at the zone like this, right? These candles all overlap, so there's no inefficiency. That's an efficient price market, a price structure. I don't want to use those. First inefficiency I see on a 30-minute is right here. So if anything, this would have been the zone I wanted to look at because it's got my gap, okay? But again, the volume picked up, but it's not like it was great volume down here. I would have rather seen one of these yellow volume bars on this candle. So that's just why I avoided this whole thing altogether. I know that's kind of a long way of explaining that. Really got to keep an eye on the FEG. Yeah, gaps are important, but they're not important for the reasons that most traders use them. I think most traders are using them. Well, it might be a hot take, I say this, but a lot of people will look for the fair value gap to treat it like a launch pad, to treat it like a zone, like a demand or a supply zone. Now, some people seem to have success with it. But I don't think it makes a whole lot of sense, just because that's where the inefficiency is. But the unfilled orders don't start until the zone, which is typically on the other side of it, right? So in other words, what I mean by that is a lot of people, if I draw this gap up again, okay, so clearly we have a fair value gap right here. And then down here we have our demand zone. This is the inefficiency. Those finally settled up here, right? So that's the inefficiency. Well, if that's an inefficient market, does that mean there's, oh, it looks like my chart. Let me get my chart back up, guys. Okay. So yeah, just going back to my trade of thought. So if this is an inefficient market, that means there was no supply. Okay, the demand was so hard, it exceeded the supply so hard that there was no transactions until you start getting up here to the top of the candle. Well, down here we had a temporary equilibrium. Equilibrium means equal buyers, equal sellers. A lot of trading activity, right, in this area. And we know that by the candle. But then you get this giant exit candle where there was no supply. But right before that, that's where there was supply and demand equilibrium. So to me, this is where the orders are, the unfilled orders. Why do I say unfilled orders? Well, if I'm a buyer of this market, but I missed this move, and I see that prices went all the way around, right? This is where you hear people say the market. How do they say it? The market doesn't always repeat, but it rhymes. Okay, that means it tends to want to do similar things. So people see this and think, "Oh, I want a piece of that action. If it comes back, I have my bets that it would do the same thing, right?" So that's where the concept of unfilled orders partially comes from, and partially the fact that the banks, okay, if they started buying this position, they probably didn't get their full position filled, right? Because again, they're buying and selling millions of dollars, right? We're trading with our measly $5,000 accounts, $20,000 accounts, right? That's small to them. $50,000 that's tiny compared to their millions and hundreds of millions and billions, guys. So they can't possibly put in a full order down here. They have to start layering it in, accumulating. Okay, accumulation distribution. That's Wyckoff theory. So if they got a partial order in, then if and when price returns, right, this is where they want to fill their order, put the rest of their order in. Problem is, again, I just didn't see a whole lot of excitement there because of the volume. So that's a long-winded way of saying it. I just ignored it because of that. And this is kind of thin of a small range as well, very thin range. I like to have it a little bit thicker depending on the time frame. So yeah, just a lot of things, guys. My goal when I get into any trade is try to accumulate as many odds enhancers in my favor as possible. What are my odds enhancers? I don't think I've showed this for a while. Let's go take a look. Odds enhancers right here. Okay. Supply and demand zones with strong fair value gaps leaving the zone. This is number one. Then number two is something I call master pattern. Okay. Where is fair value? It's similar to the zones themselves, but this is essentially the contraction period. Okay. Contraction before the expansion, which we can see with contracting price, which is similar to a zone, right? But it just works a little different. But yeah, then I also care deeply about the momentum on retracement legs. Okay. If price leaves a zone, then when it returns to the zone, I don't want it to come back sharper than the way it left, because that's a hot ticket. That's, getting in the middle of the front of a train or catching a falling knife. So, yeah, I just want it to come back a little bit less hot, not as hot, right? Not as hot as the way it left. Engulfing candles, okay, the hammers, the shooting stars, all that. I like to see that when price hits my zone, just showing me, hey, we're getting some serious small time frame, push away. And then obviously my volume spikes, 2x, 3x, 4x, right? The previous sets of candles. RSI divergences are really strong. I love RSI divergences. I don't really talk about them a whole lot, but yeah, it is definitely something I look at on almost every trade on a smaller time frame. Hey, is my momentum starting to sway the other way? Okay, am I getting that divergence? If I'm getting lower lows coming into a demand zone, is my RSI making higher lows, right? That's what I love to see. Oh, I love that. That's momentum shifting. That's momentum changing. Okay. So that's how I use divergences. And then, yeah, I'll look at VWAP from time to time. These are some of the other ones I don't look at a ton. Well, confirmation with break of structure. That is actually one that I should move to the top. What am I doing? That should be up here to the second. And this changes from time to time too, right? There we go. That's a little more important than I gave it credit for. What else have I got down here? Master pattern fair. Yeah. So the midline of fair master pattern boxes, fib retracements, support and resistance, bounces, liquidity grabs. Yeah, guys, those are some other things I'll look at from time to time, but I don't pay a ton of attention to. It's mainly this top section up here. In fact, I think I might have even sent that to you. Maybe. Let's see here. Of course, you guys know I color coordinate everything. Got to make sure everything's looking good. So, all right, let's get back over to the chart. Let's take a look at the silver. I want to look at silver because silver is the trade I am currently in, just to show you guys, give you guys a heads up on it. So with silver giving me a bullish signal, let's think about this for a minute. What happened on Friday? Okay, Friday silver jumped 10.5%. 10.5%. Okay. So that's just a screamer of a move, right? Screamer. Then what happened yesterday? Well, I should say Sunday. Sunday here in the States. The market gapped up. Now, it gapped up in a very strong uptrend. What does that mean? That's what you call a novice gap. Okay, that's a gap. Because think about this. From the top of Friday's close to the Monday open, okay, is right here, right? There's our gap. That's a gap. It doesn't look like a gap, right? It looks odd, but that is a gap. It gapped up. Well, if it gapped up in a strong uptrend, it's no surprise when price reverses. When it gaps up like that, though, this is where you see a lot of novice retail traders continuing to buy the market. Why? Because it's going to the moon. It's going to the moon, right? Going to the moon. And then all of a sudden they get just destroyed, as you can see, because the banks and the big money and the whales take price the other way. If price would have opened up down lower instead of opening up here, that would be what's called a pro gap. What's a pro gap? Pro gap. Well, pro gaps are gaps to buy, meaning if it would have dropped into this demand zone, just as an example, right? This daily demand. So we're on a daily time frame, and you guys see this orange, this yellow box, because obviously the Friday candle was a screamer. Okay, a screamer of a candle. So clearly, the beginning of this got to be some power in there somewhere. But yeah, if price would not have opened up here and it would have opened instead down here, that would have been a great. Okay, that would have been to me a better place to buy. Well, even though it's still gapped up there, it dropped right into that demand zone. So that's where I got in. So excuse me. So daily demand. Okay, got the hiccups all of a sudden. So I looked at this from a daily time frame, but then also a what was it, a 2 hour, 4 hour, 1 hour? Yeah, 1 hour. So here you guys go. Okay, this is my 1 hour demand zone right here. Let's go zoom in just a little bit. Okay, so all this is my daily demand, but specifically right here is my 1 hour demand. I didn't see the greatest 4 hour demand zone. That's why I dropped to a 1 hour. Okay. I mean, you got a fat doji basically right there for your 1 hour demand. A lot of volume, I like. And then obviously you had a big push away, right? This basically to me was the candle that kind of somewhat started it all, started that gigantic, push up. And that was actually Thursday. So Thursday you had a nice day, but then Friday you had a nice day. And then now all of a sudden we come into the markets this week, then the price just declined like crazy. Okay, from the top of that range until basically this morning, yesterday morning, I should say, it dropped 16%. That's a huge drop, right? Huge drop. So what did it drop into? Well, it gave me think about it. That's a 16% discount. Think of it this way also. I don't know what all the sports cars cost. Ferrari, okay. Porsche, let's just say this is 82,000. Okay. Now it's $82, 82.00. Let's just pretend that's 82,000. Well, do I want to buy that Porsche at 82,000? Or if I know that Porsche is going on sale all the way down to 71,000, 72,000, $10,000 off? Are you kidding me? Just for waiting a day? So I could buy that Porsche for 82,000 or wait till it goes on discount all the way down here to 72,000. You don't think anybody in the world that's got the money to do it would want to take that deal? Hell yeah. Well, because I know the value of metals is going up. Okay, especially silver. Guys, you got to check this video out, and I'll share it here in a second. But yeah, silver is going crazy. Silver and gold both, but especially silver right now. Let me show you this. Okay, let me turn my drawings off. And let's just reset to a weekly chart. Look at this. Look at this. Let me go to a monthly. It looks even crazier. Hey, look at silver. See, we're back in 2003 era over here. This is a monthly chart. Each candle represents 1 month. Okay, we got a really nice bump up through 2011. We thought it was going crazy. And then what happened? Okay, it went over a decade just going down sideways. And then finally, this year, where's the start of this year? Right there. Okay. This was the start of the year. This was the turn of the new year. It's just been going parabolic. Now, what goes up must come down, right? Right. But does it mean it has to come down right away? Hell no. Guys, people beat it with a dead horse when they say this, but yeah, the markets, look, they can remain irrational longer than we can remain solvent, right? So this is basically a cemetery, a graveyard of all the short sellers that thought they could step in front of this thing and push price back the other way. So yes, this is a very irrational move. On a monthly chart, the RSI is damn near 100%. Look at this. I'm just isolating the RSI. Look at that, 99. I've never seen anything that high, and that's on a high time frame. That's absurd. Okay, weekly time frame, we're at 82, but we got up to the same thing, 100, 99. Look, reminds me of Madden football all over again. Madden 99, Madden 99. Okay, daily, we're getting up to the 95, 97, 98. That's absurdly overvalued. But just because it's absurdly overvalued, does that mean it's got to come down? No, it doesn't. Because again, all these little dips, there were shorts piling in, and then only to just get the rug pulled out from underneath them to the upside. Okay, they were feeling pretty good back here in late October for about a week and a half. And then what happened? The rug got pulled and went back to all-time highs again. Well, to the recent highs. And then it started going down again. You don't think a lot of shorts piled in right here? I'll guarantee you they did. Why? Because the price action shows it. The candles, the down candles, only to get rug pulled. And then the process just repeats and repeats. Same thing on gold. Okay. Gold charts just going ape shit. Okay. I mean, just absolutely hog wild. So yes, all this stuff is way too damn overvalued and too overpriced, but that doesn't mean it has to come down. So until it proves on one of these higher time frame charts that we're going to get some lower lows and close, I'm staying in this thing bullish. And I've also got the funnels on my side. Okay, gold +7. Hell, even the whole metals market, copper, right? Platinum, but then you got silver. So until this starts going down to neutral, I'm staying long metals, buddy. And the same thing with the indices, which is kind of strange to say because it's not a direct, inverse correlation by any means. But, it's just kind of funny to see the indices up here as bullish scores and gold and silver. A lot of times it's just one or the other. But currently we're getting both. There's a tool that is out there called the correlation coefficient. Okay. Let me show you guys a cool thing here. Let me look at your chats real quick. FEG. Yeah. What usually is the indicator to go short? Like what would you look for? I look at the candles. Guys, the best indicator in all of trading is the candles themselves. It's not any of this stuff, right? All your indicators. Okay. Most of all this stuff is lagging indicators, which price is too, to be fair, because we're obviously seeing transactions that took place in the past, right? But the best indicator is the candles themselves, right? The candles will show me when price enters a contraction period, okay, a zone. And as long as that zone had a strong move away from price, left our fair value gap, right, then that's all the information I need. It helps when I see volume or volume spread analysis, since the currency market doesn't have that, centralized volume like everything else. But yeah, that's the only one I'd personally look for. I just use a few of these other items only to see what the retail crowd is looking at. Because if the retail crowd is all doing one thing, you can typically understand after you've been seeing these charts for a long time, you can see where they're putting their liquidity. So the whole point in trading is not to think like a retail trader, it's to think like a bank. Okay. So learning all you can about accumulation and distribution, which of course is Wyckoff theory, how the big banks see price. Where are they looking for stop losses? Where are they looking for liquidity? How can they get into their multi-million-dollar orders, right? That's my personal goal. That's just what I try to strive for, is to think like a bank. You literally have to, because they're the ones that make all the money. Is it us retail traders, or is it the big banks? Okay? They're the ones making all the money. So if they're the ones making all the money, I don't want to try to reinvent the wheel. I want to see what they're doing on a chart so that I can jump on and ride their coattails on the way up or down, right, if they're shorting. So hope that helps a little bit. It's all about mindset. That's why I always say, guys, most of the technical analysis books that we find in the library or the bookstore on trading, a lot of it's outdated. And all it does is teaches everybody to do the same thing. And if everybody's doing the same thing, the banks know it. They can see it because of the chart. Gold. Sun FX. Okay, yeah, gold. No, I did not take a trade on gold. I have a trade on silver, but we'll definitely look at gold as well. So yeah, just to finish my thought on the silver trade. Come on now. Positions. Okay, my silver trade. Go back to my higher time frame. Daily. Obviously, guys, I just showed it. I don't want to beat it like a dead horse, but yeah, it's just been screaming up. So of late, okay, we came down to a daily demand. Let me just delete all this. Okay, so we came down to this daily demand zone. This candle right here is a daily demand. How do I know it's daily demand? And it goes back to the indicators. Which indicators do I use? This is all I care about. Okay, the candle itself, because the next candle screamed upwards and gapped. Okay, it gapped up. This is a novice gap. It gapped way the hell up. A lot of buying pressure. I mean, in truth, it started way the hell back here, but you know, I try to look at the higher time frame zone as the daily, just to see where was the last collection of super strong buying where demand exceeded supply, and that's the point I wanted to return to look at exploring a buy. So that was the daily candle there, daily demand. So my favorite all-time confluence is when I see a 4-hour zone inside of a daily. So if this yellow box is my daily demand, I want to find my 4-hour demand, and there we go. I mean, that's just as clear as day right there. Sorry. That's as clear as day, a daily demand. And then I'll just color that green. Okay. 4-hour demand with a nice gap coming out of it. Okay. That was that. Well, actually, that was the Christmas gap. Is that right? Yeah. Christmas before the market closed down early. But yeah, there we go. And I mean, there was, that was a gap without even having to use any candles. Okay. So that's my buy. I mean, this is my buy point, quite simply. All right. That's why I didn't get into a silver trade though, or to a gold trade, because I was more focused on silver. If we look at gold over here, okay, it had a very similar demand zone on a daily time frame. But what happened? Didn't really get a trigger candle. Because if that's my daily demand, well, it looks to me like price chewed through the demand, right? So let's go down to a 4-hour in that same zone. Yeah. So see, this right here would have been the 4-hour demand, which clearly, as you guys can see, it just chewed right through it, right? So if I go down to a 15-minute, a 10-minute, a 5-minute, I kept having lower lows and highs. Let's go back over here. All right. So this is a 5-minute chart, and now you guys can see my daily and my 4-hour demand zone, right? As price enters the zone, it touched it right there. But when price came out, did it break a structure to the upside? Nope. Didn't break any of these swing highs. And then it made a new lower low. Okay, price got another bounce. Some would say that's a bullish candle right there, right? That's a bullish candle. Well, did price break a structure from that point? Nope. It turned around and made another lower low that went through the rest of the zone. So it chewed through the zone without breaking any structures to the upside, right? So that was all I needed to see to know to stay out of gold, because it did not respect the daily nor the 4-hour demand. Yeah, guys, when it comes to RSI, I like to see the divergence. Yeah, I see you saying RSI. Yeah, RSI, again, I like to use RSI for divergences, but again, only thing I care about at the end of it all is the candles themselves, the price candles, right? I just showed, right, that we didn't have any breaks of structures to the upside. So this was an easy reason to avoid buying in this demand zone. Whereas silver, gave me that break of structure. Okay. Now it took a while. I watched this zone all day long yesterday because I started watching it with you guys on this stream. But I watched this all day yesterday because let's take a look now. Now this is that same 5-minute time frame. Okay. Lower high, lower low, lower high. So right here is where a lot of people are buying. Yeah, ask as many questions as you want. Absolutely. Yeah, this is for you guys for sure. But yeah, as far as this silver trade, it bounced into the zone here. This is where a lot of people are getting into the trades. But I know that we got this supply, this little mini supply zone right here. We didn't break a structure, right? We kept going down. We went deeper into the zone. This is where the bids finally started coming in. Okay, the bids finally started coming in because we didn't get any more lower lows from this point. Okay, in fact, we got a higher low. But at this point, the only thing I'm interested in is let's break. Let's see here. Where did I get in this trade at? Yeah, it was basically, I finally got in after I saw that we started slowly having some higher highs and higher lows. But then I looked at this point right here because this point did make another smaller low or well, higher low. But then we came and made a higher high. And this is basically where I got in. So I just waited until I started to see some higher lows forming in the zone on a smaller time frame. Okay, so swing low, or higher low here. You guys see that? When I started seeing this price action take place where these low points were touching, that's what made me finally interested in taking a stab at this. And even when I got in this trade last night, I still thought it might have been a little aggressive because yes, we were starting to see higher highs and higher lows, but it's not like they were going very far, right? But at some point, you just got to take a trade, right? It started catching the bid. I started seeing these higher lows come in, higher highs. And then as it started to come out of the zone itself, the higher time frame zone, that's where I just got in. And as a result, you guys see it's doing well. 40, 70, 40, plus 925 with all my accounts so far, unrealized. Nice. 12 years. I've been in trading 12 years. Yeah, 12 years. I took classes at Online Trading Academy, if anybody's ever heard of that. At one point, they had 40 locations worldwide. I went to the location here in Kansas City, Overland Park, in 2000 and what is this year? 2025. So 2013, I think it was. 2012. What year did I go? It's been, well, January is going to be 12 years, and my math is horrible. So 5, 6, yeah, 2013, I think. Yeah. Yeah, so I went in 2013, okay, in January, took a stock class. The cool thing with taking classes there was you have to pay for it, okay? They're not exactly free classes. They were kind of costly, but when you buy the course, you got free lifetime retakes. So I took it in January, and then 6 months later in January, I retook the stocks class and learned stocks. But then I got to realizing I don't have $25,000 to open an account because back then you had to have a much higher amount than you do these days. So I started doing some studying on other assets, and I saw Forex. You could get started on a smaller account. Okay. So I ended up taking the Forex class in January of the next year. And then I retook that class 6 months later. Okay. Because I found a broker where I could get in for $2,000. Okay. So $2,000 or $20,000 or $25,000, whatever it was for stocks, right? I just didn't have the money for it. So I ended up getting into the Forex thinking that was just going to be a temporary thing, but it turned out to be my favorite thing. I love it. So prop firms. I got a couple challenge accounts, okay? Yeah. No, I've never been blessed with the high money, okay? I spent 12 years just studying this stuff and waiting and hoping that I was going to get a chance, and finally I found some prop firms after studying them for several years because I just didn't trust them. I didn't trust them. Okay, a lot of them were shit, to be honest with you. But finally landed on a couple, and yeah, working them pretty well. So, got about 15 minutes here. Let's see, where did I leave off? Okay. Yeah, let's take a quick look, guys. I don't want to get out of here without running through these assets. So NASDAQ, okay, that's the one I'm still in. Okay, I'm just going to let it do its thing. I'm going to ignore it. So because I'm in a NASDAQ trade, I'm just going to personally ignore the rest of the US indices. I don't tend to want to get double up my risk on any one asset or in a currencies, right? Any one currency. So because I'm in an index trade, I'm going to personally ignore the S&P, the Dow, the Russell, all that. Does that make sense? Yes, I can double my money if I get winning trade, but if I lose, okay, it's doubling your loss. Well, why would I want to do that? Now, if I wanted to get into 2 or more assets, then I would just do it at the same time, but just divide my risk in half, spread that risk over a couple, 3 assets, right? But because I did I still did a 0.2%. Okay. So it's not like I did a big trade. So yeah, I mean, I may still keep an eye on it, but I just don't like doubling up my risk. So let's take a look at and we've already looked at gold and silver. So let's just go take a look, guys. We've already looked at New Zealand dollar. So let's look at pound dollar. And then we'll take a look at a couple of these bearish assets. And then by the time I do that, we'll be done for the day. So let's go on back over here. Pound dollar. Okay. So pretty expensive prices up here. Okay. This is a bullish signal, but we got expensive prices. My cheaper prices are going to be down here in this daily 4-hour demand. Okay, so this is basically the same as yesterday. There's my daily demand, and then right above it, kind of half in and half out, is our 4-hour demand. All this down here looks pretty efficient on the higher time frames. Candles are overlapping, wicks are overlapping, all that kind of stuff. If trading is possible, become a esports. I don't know what you mean. You might have to elaborate on what you mean, buddy. I don't know if that's a question. I don't know what that is. Just elaborate if you would. But yeah, this is it, guys. It's too far away from price. Yes, I could find something in this area on a smaller time frame, but this is just nothing more than one big gigantic chop fest right here, right? Do I really want to get involved in a chop fest at an expensive ass price? Probably not. I'm just going to wait for a discount. So pound dollar is off limits. Just because it's given me a bullish signal, fundamentally and sentimentally, doesn't mean I just want to turn around and go smash the buy button. Okay, that's where the charts come in. Find your reason to get into a trade, and then the chart is nothing more than a timing mechanism. Okay, when you watch CNBC, when you watch the BBC, when you watch all these networks, right? Bloomberg, when they bring on the bankers and the CEOs and the big wigs, okay, the big banks, the trading firms, all that, hedge funds, are they talking about 15-minute time frames? Are they talking about, are they talking about 10 and 20 period moving average crossovers? No. What are they talking about? What are they talking about? What are they talking about? Okay. They are talking about this stuff right here. Right? Are they talking about GDP? Are they talking about inflation? Okay. Are they talking about these inflation gauges? Consumer price index, producer price index, excuse me, personal consumption expenditures. Is that what they're talking about? Are they talking about the job reports? Okay. Employment numbers, okay. Non-farm payroll, interest rates. This is all they care about. This is fundamental analysis, right? This is what they're talking about. They're not talking about a 15-minute chart or a 5-minute chart. So the heat maps, okay, the difference from one heat map to another, right? US to the euro, okay, euro to the UK, okay, whatever, New Zealand, okay, depends on what currency you're looking at. The relationship of, so this is where everything starts for me. What currency is the strongest? What currency is the weakest? Well, right now it looks to me like the Aussie dollar is the strongest because it's exceeded expectations. In other words, it's got economic outperformance on 71% of its recent releases, right? And on the opposite side of that, what's the weakest? It's the euro currently. Euro has exceeded expectations on only 17% of its recent red folder events. Some of them are orange folder, but most of them are red folder. So if I know that, if I know I got a strong currency and a weak currency, then I want to pair those two up and go take the side of the strong currency. But that's just the fundamental reasons. Well, then I want to start understanding the sentiment analysis, which is something nobody talks about. I don't see anybody talking about this. What's sentiment analysis? Well, that's the commitment of traders report. Where are the big banks positioned, long or short these assets, these individual currencies, these metals, these indices? And then also, where's the crowd sentiment? Is the average retail trader net long or net short on this item? They're net long. Okay, I don't want to join the crowd and become their liquidity. Right? Observe the masses, do the opposite. Most traders, unfortunately, lose money, right, in trading. That's just a reality. It's a sad reality, but it is a reality. It's a cutthroat world. Dog eat dog, right? Swimming sharks in the water. So that's the banks that's circling their prey, guys. Yeah, I didn't say it was going to be pretty. Pretty ugly. But that's why if you ask me who I want to trade like, I don't want to trade like a retail trader. I want to trade like a bank. They're the ones making the money. So yeah, sentiment analysis. Okay. Something nobody talks about. And then once I have a good fundamental and sentiment reason to go buy or sell something, then that's where I just, that's where I go to the chart and time it. But again, it doesn't tell me to buy just because it says bullish or bearish. Remember, I'm not just going to go out and smash the buy or sell button. Got to wait for the chart to do so. How do I know when the chart's telling me to do so? Well, when price starts entering into a patch of unfilled orders and liquidity. So that's why that's why I've got no interest trading up here. This is retail chop for pound dollar, just as an example, just to drive this point home. I have to wait for a discount. The discount, in my eyes, comes at these unfilled orders with gaps above them and breaks of structures over here. Get to the return to the price, right? Line up your zones, okay, daily, 4 hours. So I kind of pointed on this yesterday. I would personally prefer to wait until price comes down to the daily, because the bottom of the 4 hour is the daily, the top of the daily. Okay, that's a hot zone right there, in my opinion. But I'm not going to buy it up here just because my top setups tell me to buy. Got to get a discount. Okay, got to get a discount. So hopefully that all makes sense. Just kind of parsing that puzzle together for you a little bit. As far as, so yeah, nothing on pound dollar. And I'll just wrap it up with a couple of these bearish items, and then we'll get out of here. Euro Aussie. Let's see what we got. Is Edge Finder free, or is it? Nah, it's a separate item, guys. Now that I'm out solo, I don't know. I'll have to ask them if I can actually talk about it. It's with another company, an awesome company that I love that helps keep all this stuff straight. So I'll talk to them, see if I can talk about it. I don't know if I can. I don't want to, you know how the lawyer thing works, right? I don't want to be advertising something that's not approved. So it is a company that I think we're probably going to be working with, but I do not have the final details on that. So to protect myself, I'm not going to talk about it or advertise it just yet. Okay. But yeah, there's a a price you pay for. It's just a one-time payment, but I won't bring any details about that at this time. So we'll let you know. Yeah. Oh yeah. Another place for sentiment. Yeah, absolutely. There is. Let me find one for you here. Been a minute. It's been a minute since I've used it, but I'm just looking off screen, guys. Sentiment. Come on. Where was that at? No, it's not that one. What did I use? FinViz, I think, was one. FinViz, was it FinViz? I'll tell you what. Let me dig that information up, Connor. Yeah. Just book another session. I haven't used third-party sources for so long, I can't even think of them off the top of my head. And I have a gigantic trading folder that's got all my goodies on here. It'll just take me some time to go through. So yeah, we'll hook up offline on that. But yeah, as far as these bearish assets, guys, Euro Aussie is a -7. So we're going to take a look at this one and see if we can't find a place to short sell. Okay. You guys see higher time frame? I've kind of drawn up this downwards trend line. I do it just because I know everybody else is doing it. And if everybody else is doing it, then I know where typically liquidity is going to be for the banks to attack, right? So looking at my supply zones, because I want to short this, okay, what have we got? Okay, this is the origin of this strong move down. Get rid of my drawings for a second. Okay, origin of a strong move down. Now this, in all fairness, this down move, I would not even call this an impulse leg yet because it hasn't even broken the structure to the left, right? This is not a true downwards momentum leg or impulse leg, okay, until it does that. So I have to be careful with this leg right here. I would like to shorten this leg, but I have to be aware that so far this leg hasn't had enough strength so far to break through the swing low, the break of structure, which is one of my requirements. Now, if it doesn't break through the structure and returns to a zone up here, I'll still probably take the trade. I just won't be putting a full risk on. I'll be taking off some risk. All right, just kind of tiptoe in. It's like the beginning of a warm April day here in Kansas. Okay? You get our pool opens up, but the water's still cold, so I'm just gonna tiptoe in, right? Yeah, it's funny how some people do that. I personally like to cannonball in, just get it over with, right? For 1 second, it's going to be painful as hell, but then you get used to it, you're good to go. So that's my idea behind these zones. So let's go down from a daily to a 4-hour, and you guys can see right here this candle. We had that basing action and a gigantic drop, right, on that next candle, which is where I put my supply zone. Okay, my supply zone right here. So I want to keep an eye on that area. Now, a couple things that aren't the greatest is the fact that it is kind of in the middle. Okay, swing high, swing low. Are we diddling in the middle? Perhaps. Okay, so again, I would still potentially look to get in a trade if I get a reversal pattern, but I'm not going to be betting, in my instance, a 0.5%. Okay, I do 0.2 to 0.5% risk per trade. I don't do 1%. I don't do 2%, which is what typical technical analysis books teach. It's too high. I put a shorts video about this on earlier, maybe last Thursday or something. No, that was Christmas. So it would have been Wednesday, I think. I think it was Wednesday or Friday. Just a shorts video. Guys, technical analysis books teach 1 to 2% max. I still think it's too much. Beginning traders, start off down low, 0.2 to 0.5. I think 0.5 is even cutting it if you want to know the truth. Okay. Until you get bored making money, you should be trading, you should be risking small amounts. That's what my mentors taught me. Tiger, whatever your broker allows you to trade the minimum amount, do that for 10 trades. And when you get bored of making money, that's where you can start increasing it. Right? Slowly increase it. Don't just go, deep into the deep end betting 2% per trade as a new person. If you've been around for a decade or longer, that's understandable. But brand new people, just be careful with it. So yeah, I would still risk probably 0.2% here. Okay. If we get higher up here, it's a different story because I'm at the beginning of the overall move down. Okay, the origin of the strong move. So maybe bet a higher risk. Okay, a little higher risk up here, but down here I got to be careful. Chop City, potential Chop City. So we're still a ways away from that. We're about 80 pips away on Euro Aussie. That is the strongest bearish item I got. Now I have to also keep in mind we just bounced into a 4-hour demand zone, right? Did we have a gap down here coming out of this zone from here to here? Got a gap, right? So is this a strong zone? Well, we're going to find out. So because it has bounced into that zone, it looks like it's trying to roll out, come up, right? That right there may make me think twice about selling in the middle, about diddling in the middle, right? I would guess that this 4-hour zone would be strong enough to push price to the farther higher time frame supply zone, which would be up here. Now, right here's a daily. You know that because it's a yellow box. So let's flip to a daily real quick. Okay. So that, yeah, daily supply. Now, do I have a 4-hour supply inside of there? Let's take a look. Let's take a look. Is there a 4-hour supply zone with a gap in here? You could look at this as a supply zone, but what happens? Did it get touched? It got touched. Okay. It got touched right there. So that negates it. So to me, there's not a 4-hour supply zone. So yes, I could go down to a 2-hour. If I go to a 2-hour, do I see one? Yeah, by definition, this is one right here. Okay. No, not that one even. Let's go look at the next one over. Is that one? Does this one work? Okay, so this one this one works as a supply zone. But I just don't like it. I got to be honest. That looks hideous. Was that gap coming out very big? Nope. Look how tiny that gap is right there, that little white box. That's too weak. That's weak sauce. So I do not like the 2-hour supply zone. But the 1-hour. The 1-hour look good? Do we have a strong gap on a 1-hour? Nope. Yeah, that doesn't look good either. That's why I basically didn't draw any zones up here because I didn't like any of the gaps on the 4-hour, the 2-hour, or the 1-hour. I really need to see a good gap on at least one of those time frames, preferably the 4-hour and preferably the 1-hour. But in this case, I didn't even get it on the 4-hour, the 2-hour, or the 1-hour. So that's why I'm basically sticking to this 4-hour zone at the origin of this overall strong move down as the highest probability, but it's not even broken a structure yet. And it's hit into a demand zone. I don't like it at all. That's a long way of saying that, guys. You're Aussie. I just don't like it. So we're going to ignore that. And I think we've pretty much reached the end, guys. Yeah, with these other two assets, maybe we can dig some more into them tomorrow. I have run up against the same picture I just showed you on Euro Aussie. These other two bearish assets have the same picture. Okay. Need to break some structures, some higher time frame structures. Maybe by the time tomorrow rolls around, maybe those two will have broken some structures and maybe we can show those. But today there's just flat out nothing to show. So for me, it's all about maintaining my NASDAQ trade as well as my silver trade. Okay. And they're both looking pretty good. I'm up to over 1,000 now on unrealized profits. So I'm going to stick with that and manage those trades today, guys. But other than that, I'll be back tomorrow, same time, 6:30 a.m. 6:30 a.m. tomorrow, Central Standard Time, until 8 o'clock a.m. Central Standard Time, each and every day. And stay tuned. If you guys trade futures, you'll see Coach Sam popping up here shortly. Let me just go show their channels for you real quick. That way there we go. Yeah. Coach Sam right here on @Sammy Futures. Okay. He'll be popping up shortly if you're a futures trader. Okay. And then soon after him will be Coach Adelina over here on @She Trades Fire. Okay. So there you go. She trades some of the index futures as well. Okay. So Forex, futures. But if you guys look from now on, starting tomorrow, if you guys have any questions on stocks, let me know about that as well. Or even if you're trading a commodity, a oil or some futures, I mean, I can still chart it. I can chart about anything. But when it comes to, obviously my edge lies in currencies and the US indices on the CFDs, and then gold and silver, Bitcoin as well. We can look at Bitcoin. So yeah, even if it's a stock, I mean, I watch a list of about 25 stocks on the daily as well. So we can maybe take a touch on some of those tomorrow. But yeah, just let me know, guys, if you have any interest in that. But if nothing else, I'm gonna get out of here for the day. Peace out, chicken grease, and all that. See you guys tomorrow. Thanks a lot.